But one of the big stories that we're covering is the amendment to the Finance Bill 2026, where the government has introduced a flat 12% surcharge on buyback gains for individuals. Now, this could actually increase the tax burden for many investors, especially those in the lower income brackets. To discuss the tax math, let's get Amit Maheshwari, international tax expert, to join in. Amit, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. First up, for the clarification of all our viewers, there was an amendment that was made during the budget. So there is a lot of to and fro and confusion with regards to, does this surcharge come in over and above, or the slabs which were announced earlier are the ones which actually get nullified, and this will be a flat 12% surcharge that will be charged on the total income earned or on the total profit. Help the viewers understand what is this amendment actually meant to do in terms of their calculations.
So, hi, thanks for inviting me. So this particular amendment is only related to the tax on buybacks. It's not for other incomes. On the tax on buybacks, they have come out with the capping of the surcharge at 12%. And like you rightly said, it would impact the small and medium taxpayers. So individuals having income less than 1 crore, they are going to be impacted by this because that is higher than what the surcharge that was applicable to them. And for people who are earning more, there is a reduction. However, just yesterday, there was a post from the tax department on the social media handle saying that this particular capping is only for promoter entities and not for other individual shareholders. So that's the very latest news which has just come yesterday, and that's on the social media handle, not followed by a formal clarification or press release. So considering what they've said is correct, I think this is applicable only for promoter entities and the additional tax which promoter entities had to pay. So the individual shareholders can continue to be governed by the surcharges, what is applicable to them, as well as the companies which are non-promoter entities. But that is, as you rightly said, there was a confusion. There's a lot of to and fro, and as such, we also don't have a formal clarification on this. So there has been interpretations going around, and
interesting
seems to be causing a confusion.
Okay, Amit, so therefore from that perspective, just so that we're all on the same page, assuming that this is only to do with promoter entities, what is the extant rule that will come into play for individuals, for most individuals, because ultimately those are the people that are watching you right now. So for most individuals that participate in a buyback, what is the tax treatment and how will it work from the 1st of April?
So that would be taxed, buybacks would be taxed as capital gains. Earlier what was happening was that buyback was getting taxed as dividends, and the capital loss and the cost of acquisition was allowed as a capital loss which was carried forward. So that was clearly not in the benefit of individual shareholders. Now the difference between the cost of acquisition as well as the buyback price, that would be taxed as capital gains, and the normal surcharges which are applicable on them would be applicable. And of course, we have the short-term and the long-term rates which are applicable for individuals. So that is again, but I just wanted to say that buyback still is lucrative, and obviously you have various reasons for doing a buyback. So you have it obviously. I mean, you can't really compare it with a dividend. That's what I wanted to say.
All right. Thanks so much for getting us those details, and we'll have to get some clarification as to what exactly this has meant, and perhaps we'll get that today. Thanks so much, Amit, for taking the time.